All right, guys, here we go. We're going to be working with the worksheet for problem 12A3. Now, it tells you that it wants you to finish the worksheet. You should have already had all of this in the adjustments. What you need to do is do the adjusted trial balance, income statement, and the balance sheet. Now, we're going to go through this, okay? Nothing happened with cash. Nothing happened with accounts receivable. But here we notice that the adjusting entries are already in for the merchandise inventory. Now remember, the reason that this is happening is because what we're trying to do is bring forward the balance that we ended up with. Instead of saying we have this much on hand, this is how much was sold. And remember, the reason that we already know it was sold was because we've got everything here, sales, returns, and allowances right here. So what we're trying to show is what we have as far as the balance. So when you debit the with your adjusting entry, make the debit for the merchandise and then the credit, you're actually taking this number out. Notice this is out. So you're crediting that amount out, but you're bringing it forward on the adjusted trial balance. Prepaid insurance, okay, that's A right there, A and B. So let's find A and B again. A and B here, income summary. So we're taking this portion here and we're crediting it, and then we're taking the B portion and we're debiting it. The reverse, okay? The reason we're doing this again is to ensure that when we go into the adjusted trial balance, everything balances out. It needs to, all right? Going forward with the balance that we've got. So then after A and B, we have C. And C is the debit of the unearned training fees. Now notice we have a balance first of $281. So we have these unearned. We're now debiting it and we're crediting it with training fees earned, which means now we're showing that this month we went ahead and we used up the $350 of the balance. So we now have an adjusted trial balance of the $1,830. Okay? Just showing you what's happening on the adjusted trial balance. That was C. Now with D, okay, we have the accumulated depreciation. So we've accumulated $1,040 of depreciation. But now what we're doing is we're actually adding another month of $370, and we're adding it, bringing our new balance to $1,410 for the accumulated depreciation on the equipment. Now remember, we bring forward the historical value. Always bring it forward, okay? Then we have E. E that we're doing is the insurance expense. So again, debit the insurance expense, and then we're crediting the prepaid insurance, all right? Now here, because it's a debit and a credit, and this is a debit balance, we're actually subtracting. So instead of having $1,910, we now have $1,370 instead, okay? So when we've done all of this, the adjustments, as you see, are $23,060. Now, as you can see here with our adjusted trial balance right here, we're bringing over the ones that are not bolded. These are the balances that we have because nothing happened with those whatsoever. So we're just bringing them over, okay? So the adjusted trial balance then, when we've done all our subtractions and additions and added our expenses at the bottom, then both sides of the adjusted trial balance should come to $44,020 on both sides. Okay, good to go. Now, remember that the income statement is just that, the income against the expenses. But this time we start with the income summary as well, because we're going to show now our income based off the new balance, not the old balance. Believe me, it ends up balancing it out, okay, for lack of better words. So anyway, we take all of this forward and we add, because it's already here on our adjusted trial balance, And we see that we end up with $119,040 on the debit side. And on the credit side, we come up with $123,970. Okay, well, remember, in order to balance, but you're not really going to balance, all you're going to see is that when we subtract 120,000 from the 119,000, you end up with $4,930. Okay, bringing that in goes ahead and allows us to balance. But in the income statement, we're not really supposed to balance. We're supposed to show what our income was. Okay, then in the balance sheet is the assets and your liabilities and your owner's equity. So what you're going to do, remember, that's the other side of the coin. So we're going to be bringing in all of the items that we did not touch. Balances remain the same. So you have $24,980 on the debit side, $20,050 on the credit side. If we bring in the income onto the credit side of the balance sheet, guess what? You balance. Okay? No big deal. Easy peasy. All right? Now, what we're going to go do, though, is this is just for the worksheet. We're now going to start with the income statement and the owner's equity and the balance sheet, as you are asked to do on the homework. Okay? So this is the worksheet. I'm now going to go through the income statement, the balance sheet, and then let you see the way all of this should be journalized. And I'll see you on the flip side in homework demonstration part 2.